Hello, welcome back to Core Finance. I'm Matt Brown, joined by Rich Perry, market analyst at Hantec Markets. And we're going to look at the dollar with, well, the central banks, ECB, Bank of England, and obviously the Fed announcing this week. Getting into the week before Christmas, there isn't really too much on the macro front or data-wise, but tax reforms, etc. We could actually see a bit of volatility maybe over the coming week.
You could do, but I'm not. I think tax reform aside, I'm not really expecting too much great shakes to come out at the moment. And there's sort of the way that I'm looking at the charts at the moment, they're becoming increasingly neutral. They're becoming very much in their choppy ranges. You're seeing trend lines broken all over the place. It's very difficult, I think, at the moment to stay in a trade for very long and actually make money out of it. I think that it sort of means that near-term traders are probably going to be benefiting more than longer-term traders at the moment. I think that could well be a theme moving into 2018. I think if you look at how the Fed was on Wednesday and also with the disappointing move on core CPI, it's again just reflects that how much the Fed is not going to be able to push forward with its tightening and at an accelerating pace. And I think that is the main factor that is sort of withholding this these treasury yields, which are not being able to sort of push higher, certainly on the longer dated yields. And that is going to, I think, be a preventative move for the dollar strength into 2018. I think we're going to see markets subsequently sort of chopping around, really. I don't think I can see too many big trends coming through at the moment in these charts. And I think that the dollar subsequently is going to see a fairly sort of rangy 2018, certainly in the first few months in any case. But
let's have a look at euro dollar.
Yeah, this is sort of depicts it fairly nicely. I've got a few trend lines here which are becoming increasingly shorter term before they get broken. You're seeing the euro dollar ranging between sort of 15.50 up towards 21 big figure, sort of I suppose around about 550 pips of spread of range there, and you're seeing the momentum indicators increasingly sort of neutrally configured above 40 on the RSI, below 65 on the upside as well. So it's all sort of generally sort of pulling into a very difficult way of trading, I think, at the moment on euro dollar. Lack of trend, lack of real direction and impetus. I think if you look at the 21-day moving average, which had been a basis of support, is now sort of increasingly again sort of floating up and down and sort of being broken higher and lower. So that again reflects this lack of trend that we've got. And I think that euro dollar at the moment, you've got the support at 17.15, and on the upside 18.60 was the other day, but 19.60 was the November high. So a couple of levels to work with within the range, but at the moment we're really struggling to find direction, I think, on euro dollar. And again, what we saw with the ECB the other day, not really wanting to push ahead with sort of any sort of tightening sort of rhetoric, and that's subsequently what put paid to a bit of a euro rally that we saw sort of beginning to form yesterday. Euro pulled back in again, so I think this is going to be a theme through 2018.
And let's have a look at cable. You've got here now near-term buy zone. So
yeah, I think cable is an interesting one because it's got the added impact of Brexit and what increasingly looks likely to be a soft Brexit, because obviously what we've had is this vote that went through Parliament the other day, meaning that Parliament now has to vote on the final Brexit deal that the Tories come back with. So subsequently the Tories are going to have to put together a Brexit deal with the EU that actually is fairly I think soft in terms of the Brexit argument, because Parliament as a majority is basically on the Remain side. So subsequently, if they see a hard Brexit coming through, they're not going to vote for it. So what we're going to see is anything that's soft Brexit pushing, I think, helps to support cable on, helps to support sterling on a sort of a medium-term basis. And what we have got, as I said, is the fact that the dollar continues to remain under a bit of pressure in terms of not able to sort of push on in its strength. Now, the sort of one caveat that I do have is that gilt yields have fallen quite sharply. I think they're lowest since September now on the 10-year, which subsequently actually, there's another chart that I didn't bring today that actually there's a good correlation between the gilt treasury spread and cable, and subsequently gilt treasury spread is actually now pushing quite strongly lower on the sort of gilts over gilts under treasuries. So that is subsequently meaning that I think that this chart could struggle to maintain this uptrend. But at the moment, on a near-term basis, I think that we've got still a buy zone intact, and certainly on a technical basis, this remains in place with the 89-day moving average as well, positive momentum indicators. But how long that plays out with this with this spread on the gilts and the treasuries remains to be seen.
And let's have a look finally at gold. It's become quite a dollar play, but fallen out of favour. What's the outlook for gold? And the 2018.
Yeah, the break under 1260 I think was key, and I've been saying throughout 2017 the gold is a real choppy one, and it seems to have played out that way. And there's a big support line around about that $1,200 area. Now that's interesting because it is actually not a million miles off the average, the marginal cost of production area for gold as well. So it's likely to be that I think that the technicals on gold have deteriorated now. You're trading underneath the 144-day moving average. You're trading underneath this 1260 level, which is now going to become a pivot. You've got the momentum indicators, which are negatively configured. You've got the RSI here, which is now losing impetus under 60 and going back towards 30, which generally tends to sort of play out as a bearish configuration chart. And now what we see is a sort of a sell zone, I think, between on near-term basis, 1260 to 1270 area. I think if you see that gold sort of pushing into that area, I think it might struggle to continue to pull higher. 1300 is a big ceiling on gold, and that is, I think, going to remain the case into 2018. I think it's sort of going to gravitate back towards $1,200. And I'm not, again, going to be calling a major trend on gold. I think that's sort of around about where it's going to gravitate through 2018, around about that $1,200 area. But this sort of breakdown below 1260 does mean that I think gold will be pulling lower in due course.
We'll look out for that. But in the meantime, Richard Perry, market analyst at Hantec Markets, thank you very much for joining us.